Hello everyone, I'm Tom with Stock Navigators and this is the market update for Tuesday, January 18, 2022. As you can see that the selling pressure on the stock market has continued after the Monday holiday. This earnings season comes against the backdrop of increased volatility in the U.S. equity market, which had been attributed to worries about the rising inflation and a more hawkish stand from the Fed. Many in the tech sector have been under pressure as raising the interest rate. The U.S. Treasury yields across the curve rose with a 10-year U.S. Treasury note, TNX, they raising above 1.85%. This is the highest level in 2 years. Now let's take a look on the chart of the major index so that we can see where they're at. So we're looking for potential level of support to see the market to be able to hold on, or they will continue to drop. So as you can see that the chart I have here in front of you, that the E-mini SB 500, as you can see that the market last week they pushed it up, but they failed to make it high, and then now they continue to push it back down to the downside, as you can see here. So the market break the support here. So in the short term, we will see a choppy market to the downside. So the market, they couldn't make it another high. So now we start make it a low. So the market will be in the correction. So the question here is, where is the level of support that the market have potential to hold on and bow, or will continue to have a bigger drop? So in the short term, you can see that the market will be a little bit choppy to the downside. So this is the level of the support between 44.66 and 45.30 or 4500. That make it even number. This is the area that, the potential that the market will try to find a support. If they fail to hold on to this level here and then they break another low here, then the market will continue and we have more trouble for the market. They can pull it back down to 4400 or even below to 4372. So in the short term, you see that the market will be choppy, and you will see your portfolio, especially if you have a lot of technology stock, then you have to watch out to see that they what they are doing in this level here. And if you look at the NQ, which is the trouble one, they have been rubbing very fast here. They failed to make it high. They continue to make it low, high to the downside. So right now we're looking for the support at this level here. So if they can hold on to this level here, we will have some short-term bow, and but they have to be able to turn around. But the moment the overall trend is still bearish at this moment also. So let's see if they can hold on, and looking for some quick bow here first, and then we will see what the market is going to do. Okay, but definitely the technology stock it really in trouble because the raising the interest rate there. The Russell 2000, it also failed to make it high here, and then now they continue to make a low. So they break this level here of support, so they put it back down here. So it's the potential support within 2018 area here. This is where they need to hold on to it and turn around, otherwise we can see it more deeper correction. Okay, and the Dow, it also break the level of support. So now they push it down. So we're looking for the support somewhere around this area here. Okay, and if you look at crude oil, it continues to push it back up at the inflation raising, and the crude oil continue to push it up to the upside, as you can see here. So how far it can go, the 88 will be a strong resistance there. It's a little bit too extended. So if you are already in oil, all you do is just manage your stop loss to the upside, and let's see it when they are going to give it up. So when it won't give up, that probably where the market it will turn around. So they are go opposite direction right now. But you look at the gold here, it still goes sideways choppy. They go nowhere. They will stuck in the rainbow here. So we don't bother to get in or get out of this one, right now. So let they do their work before they can show you either the breakout continue or they will back down to test the level here right now. So they are sideways choppy. If you look at the volatility index, so you can see that the VIX it put it back out, it continue to put it back up. So right now, this level is still a strong support, a strong resistance right now. So if they continue to put it back up, then we have to watch out for another level high here. But if they fail to make it another high, then that will give some room for the market to stabilize. Okay, so when the VIX shoot back up, it's more concern. The people get more fear. People will buy more put to protect their assets. So let's see how they lay out. But this is the important level that we need to watch out for the VIX also. If you look at the 10-year Treasury note, and as you can see here, this guy will continue to rumble to the upside. So that will cause some trouble. But this is the final move of this leg here. So when this guy give up, then the technology stock will be able to turn around. But if this guy will continue to go higher, then short term you will see the technology stock will be in trouble. Okay, so let's take a look on the 11 sector of the S&P 500. Yeah, before I get there, I forgot about the Bitcoin. The Bitcoin it also tried to hold up to this level of support, but no buyer yet. We need them to turn around and find a way up. But seems like they have a strong level of support here. They don't go up, they don't go down, but they try to hold on to this level here. So if they're able to turn around and make another high, then it will change to the upside. Ethereum, it also have a strong support here. They're up and down, but they are still sideways at the market. It's in correction right now. So if you look at the first sector of the S&P 500, as you can see there, the material, they put it back down. So still sideways bearish. But they have a couple support in this level here. Let's see if they can hold on it. But other than that, they are still in the correction. The communication sector is still in trouble, as you can see here. The energy sector, that's the only one have a stronger momentum at the inflation. So the defense stock, the energy sector is still doing well. So as I mentioned to you, it's many weeks already. So if you stick with a lot of strong stock, that still continue to put it to the upside. Okay, as you can see, that CNQ, BP, CVX, Chevron, and a bunch of old stocks that still hang on to the upside. It kind of a little bit extended, but it's not reversed yet. But you need to manage your risk, because anything is too fast, they will have to pull back in one day. Okay, and the financial sector is still have some trouble after a couple earnings from Goldman Sachs and Bank of America, and so they pulled back down a little bit. Okay, so you have to see when they will be able to find a support at this level, and if they can hold on to it, they will be able to turn around. But KRE, let's see, a lot of bank stock they start to pull it down. So let's see at W Charles Watt, but still pull back down, but the buyer step back into this stock is still strong. Looks like they have an earning come up next week. Let's see how the result from the earning this week, I think. Yeah, so let's see how the result come out, and let's see how they are doing. The technology stock is still in trouble, as you can see here. It's a strong level of support at 160 here. So let's see if they can hold on to it and fight back. Or if they drop below here, then they can go down here. So you have to pay attention. So let's see how the market, they can find a support, or they will continue to put it to the downside. But semiconductor is the strongest sector. They still hang tight to that level of support here. So we'll see this week. They'll be able to hold on to it. A lot of good stock, good earnings, but they cannot go higher. They are right at the sell zone, and then they push it back right to the sell zone, then they fell again. Okay, Intel, it also still hang tight to the upside. Another sector is the industrial. Industrial is still choppy. They failed to pass through the sell zone. Now they pull back down, but they are still hang tight here. So they will find a way to fight back in the future here. A lot of stocks still hang tight, like Caterpillar, as you can see here. GE is still holding on to it, ready to find a way to break out. John Deere, that's another one right there. TSCO, okay, tractor supply. They net back down, but buyer step back in today. Okay, another sector, consumer stable, it's also too far, so they have to pull back down. That's why you see anything is too far, don't try to chase it, because you know when it's too far, momentum, the price too expensive, the people will cash out, so don't chase it. But if you have some stock in this sector, they are on the top also. Pepsi, Coca-Cola, Altria, this one here also hit into the bunch of resistance area here, so watch out for this one too. EIS, okay, this is another one, a little bit extended too. Okay, so if you make a good home run here, you need to manage your top lot. Okay, the XLV, which is a healthcare, they have a trouble to hold on to this support. Now they pull back down, so the momentum is still negative, so we don't have any support until this level here. But some strong stock still hold up very well, like I showed you on the weekend market forecast. It still hang tight, like the Merck and Company, MRK, BMY. Okay, they still hang tight to the upside. AMG and Amgen, that's another one. So let's see that, you know, those guys that they be able to hold on it and find a way to put it up. So beside this stuff, if you're busy working, you can subscribe to our Watchlist Premium Watchlist, where we will handpick many stocks daily and analyze in detail with the entry target so that you can follow. I hope that you enjoy my analysis. Please don't forget to click the thumb up like button below. Thank you for watching, and I will see you on the next video. Take care, everyone.